Welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, can I invest my 401k into rental property? Millions of Americans have money locked up in old 401ks or IRAs, sitting in equities like stocks and mutual funds. But what most people don't know is that with the self-directed solo 401k, you can unlock those funds to invest directly into rental properties, all while keeping the tax advantages. So this is your chance to get answers. Use the chat to ask questions on today's topic or anything else. Type them over now so that we can be sure to get to them all. Let's continue here. So it looks like we've got a question here already. I currently have a solo 401k. The plan was originally set up under my sole proprietorship. I have now incorporated my business as an S corporation. Should I update the solo 401k plan accordingly? Good question. The answer is yes. The plan will need to be updated to list the updated self-employed business. You're going to be able to keep the same plan name, same holding accounts, same EIN number for the plan. So it's not going to change your current account holdings or your current account features. The plan will just need to be updated to list the new self-employed business. So go ahead and submit a support ticket. I just shared a link to our support ticket system. Go ahead and submit that support ticket, and we'll shepherd you through updating that plan to list the updated self-employed business. Okay, let's continue here. So we're talking about, can I invest my 401k into rental properties? The answer is yes, but it's not as simple as writing a check. If you accidentally rent to a family member, such as your parents, children, for example, or use the property yourself, then the IRS regulations can disqualify the entire solo 401k plan. That's why understanding the compliance side is just as important as the investing side. So we're going to unpack all of this today. So while you typically cannot invest a traditional 401k, such as a 401k offered by your daytime employer, while that cannot be invested in rental properties, nor can all solo 401k plans be invested in rental properties. For example, solo 401k plans offered by traditional firms like Fidelity, Schwab, Ascensus, T. Rowe Price, Wells Fargo, Chase Bank, and so forth, those don't allow for investing in rental properties. However, a self-directed solo 401k, such as the one offered by my solo 401k Financial, does allow for investing in rental properties. Of course, before you can open a solo 401k plan, you want to make sure that you're eligible. So a solo 401k plan is a retirement plan for the self-employed, so owner-only businesses that do not employ any non-owner full-time W-2 employees who work 1,000 hours or more in your business. If your business or any of your businesses under your control employ any full-time non-owner W-2 employees who work 1,000 hours or more, you would not qualify to open a solo 401k plan. Of course, your spouse can participate in your solo 401k plan, even if he or she works in the business, and he or she doesn't have to be an owner of the business, because a solo 401k can be utilized by both spouses as long as they both work for the same self-employed business. So with the solo 401k, you'll be able to make employer contributions as well as voluntary after-tax solo 401k contributions. So a solo 401k plan is essentially ideal for both freelancers, consultants, real estate agents, and so forth. So let's see if we have any other questions here. Looks like we do have a question here. Also, I want to add my spouse as an employee of the S Corp, so my S Corp can contribute to her solo 401k. So as long as your spouse is going to work for the business, he or she can also be added to the plan. And when you submit that support ticket, let me share that link again. You can also request via that support ticket to also add your spouse to the solo 401k plan. And as long as your spouse is also working for the business, then your spouse can also make contributions to the same solo 401k based on his or her own self-employment income. Both spouses will have separate holding accounts under the plan to hold their respective solo 401k funds. So here's an example of a two-participant plan where both spouses are working under the same business. So as you can see, it's one plan. If you look at the image on the right, that's a two-participant plan. That's going to be considered just one plan where both spouses are participating in the same plan. They'll each have separate holding accounts. So it's not separate solo 401k plans, it's separate holding accounts, aka bank or brokerage accounts, to hold their respective contributions. You're going to have a pre-tax solo 401k holding account, a Roth solo 401k holding account, and a voluntary after-tax solo 401k holding account for a total of 6 separate holding accounts, because you have two participants, in this case, two spouses participating in the same solo 401k plan. So I just shared that link to our support ticket system. So if you're an existing client, we can also update your plan to add your spouse if your spouse is already now listed on the plan. Okay, good question. So let's continue here. So some of the solo 401k highlights is that you can contribute as much as $70,000 for tax year 2025 for someone who's under age 50. It also comes with the auto contribution credit, which is $1,500. You're going to choose where to hold the funds at. It can be held at your local bank or a brokerage firm. You can also make employee and employer Roth solo 401k contributions. You can even borrow from the solo 401k plan. And of course, you can also, the plan also comes with the Mega Backdoor Roth strategy, where you can make voluntary after-tax solo 401k contributions and then convert those over to the Roth solo 401k plan. Okay, let's continue here. So you can definitely use a solo 401k plan to take control of your retirement account. So if you've ever wondered if you can invest a 401k in a rental property, the answer is yes, if it's done through a self-directed solo 401k. So you have to have the right structure in order to invest in real estate, including rental properties, through your retirement account. Give me a moment here. So again, go ahead and type over any questions you might have during today's daily live webinar. We'll make sure to get to those as they come in. So why does it matter whether or not your solo 401k can invest in rental properties? Well, millions of people have former employer plans, IRAs, sitting idle in their retirement accounts. So with their solo 401k, you can invest in real estate which offers a tangible investment. So that being the real estate property. So by investing the solo 401k in rental properties, you're effectively diversifying your solo 401k and alternative investments. So you can invest, of course, in equities, but you can also diversify by also investing in real estate. In this particular example, rental properties. So the benefits of investing in a solo 401k in real estate, including a rental property, is tax deferred growth or tax-free growth. When you invest pre-tax solo 401k funds in a rental property, the proceeds go back to the solo 401k plan and they grow tax deferred. So you don't have to pay distributions until you don't have to pay taxes until you begin to make distributions from your solo 401k. So there won't be any capital gains because the funds will flow, the rental income will flow back to the solo 401k, which is a tax shelter vehicle. If it's invested through the Roth solo 401k side, the rental income will flow back to the Roth solo 401k and it'll grow tax-free. So that's one of the advantages of investing in Roth solo 401k and rental properties is that it'll grow tax-free. So with the self-directed solo 401k, you have total control with regards to the contributions you make, the types of investments you can make, and whether you want to invest pre-tax, Roth, or both types of funds in real estate. So again, with the solo 401k, you can invest in real estate, and you can do that through the self-directed solo 401k, often known as checkbook control. So checkbook control is another way of saying that you have a solo 401k that's self-directed that allows for investing in rental properties. So once you open that solo 401k with the provider like my solo 401k Financial, who offers a self-directed type of 401k, we're going to help you open up your holding accounts. They can be opened up at your local bank or at a brokerage firm like Fidelity so that you can invest not only in equities, but also real estate. You'll be able to make that investment by wire. For example, many of our clients use Fidelity Investments to hold the solo 401k funds for the solo 401k that my solo 401k Financial offers. And this my solo 401k plan that allows for investment in real estate, and Fidelity will gladly provide a brokerage account known as a non-prototype company retirement account for a solo 401k offered by my solo 401k Financial that allows for investing in rental properties. We'll provide you with a wire directive to submit to Fidelity to have those funds wired for that rental property investment. So the funds will get wired directly from the solo 401k bank or brokerage account directly to the title company for that real estate purchase. So there won't be any delays because you're the one that has control over your retirement accounts. Now, when investing a 401k, such as a solo 401k and rental properties, you of course have to be aware of regulations. So you want to make sure that when you invest that solo 401k in a rental property, that you're not having the solo 401k buy that property from you personally or from your business or from certain family members like your spouse, children, or parents. Those are disqualified parties. That would be prohibited. So you can't buy, sell, or exchange a property that you own personally to your solo 401k or vice versa. You also cannot use that property that's owned by the solo 401k for personal use, nor can your children or parents, for example, or even your spouse. You got to rent it out to an unrelated party. And again, all the income flows back to the solo 401k, so the rental proceeds would flow back to the solo 401k. Likewise, expenses. If a property tax bill needs to be paid, it needs to be paid with funds from the solo 401k. Same thing with repairs. Any type of repair that needs to be performed on that property cannot be performed by you or your relatives. And the proceeds for the payment of that expense has to be paid with funds from the solo 401k. So an example is, let's say you have $200,000 in your solo 401k. You can invest your solo 401k in a rental property. So the title to that property will be taken in your name, comma, trustee of the solo 401k. So if the name of the solo 401k is Palm Trees Retirement Trust and your name is Jane Doe, title would be taken as Jane Doe, comma, trustee of Palm Trees Retirement Trust. That's how title to that deed will be taken in the name of the plan. So again, all the rental income would flow back to the solo 401k. Expenses would flow from the solo 401k as well. So the key takeaways here when investing in a solo 401k in rental property or asking yourself, can I invest my 401k in rental property, is that one, it cannot be done through your traditional 401k, one offered by your full-time employer, or a regular solo 401k, such as one offered by a company like Fidelity or Schwab, for example. It's got to be a self-directed solo 401k plan that's offered by a company like my solo 401k Financial. And then your solo 401k can invest in rental properties. You want to make sure you avoid prohibited transactions. So you can't use that property for personal or business use, nor can disqualified parties. You want to make sure you utilize a solo 401k plan provider like my solo 401k Financial, who will perform compliance reporting at no additional cost. So once you start investing in solo 401k and alternative investments, you want to make sure that you understand the compliance requirements. There are also other compliance requirements that apply to a self-directed solo 401k, regardless if you invest in rental properties or not. For example, if you perform a mega backdoor Roth strategy, process a distribution, you transfer funds out of the plan to an IRA, then a Form 1099-R needs to be issued to report that transaction. We provide that service at my solo 401k Financial at no additional cost for clients who timely request it. Likewise, Form 5500 Easy, which is an informational return, that has to be filed for a solo 401k plan. Once the market value of that solo 401k plan is greater than $250,000 as at the end of the plan year, or if you close your solo 401k plan regardless of value, you have to file a final Form 5500 Easy. Here at my solo 401k Financial, we provide that service at no additional cost for clients who timely request it. We'll also assist with understanding the rules and regulations, whether investing in alternative investments like rental properties, whether it's contributions, distributions. We're also well versed on the self-directed IRA regulations. So those are items to understand. So if this information is helping you feel more confident about your future, please like and subscribe, as it tells other members out there that you find this information useful and it helps others to find it. So go ahead and type your questions over here before we finish today's topic. We're coming to the end of our session. And again, today we've been discussing, can I invest my 401k in rental property? So keep in mind that with the solo 401k, you might ask yourself, well, I don't have enough funds in my solo 401k to invest in rental real estate. One of the advantages of a solo 401k over a self-directed IRA for investing in rental properties is that you can make high contributions to a solo 401k. And if you're married, then both of you can participate in the same solo 401k plan if you both work under the same business, and you can each contribute the maximum to the plan, provided you have enough net self-employment income from your self-employed business to justify the contributions. For example, both spouses, if they both work for the same business, they can each contribute $70,000 to a solo 401k for tax year 2025 for those who are under age 50. So if combined with contributions for both spouses, you could contribute a total of $140,000, and that would be a good way of getting a good chunk of funds in your solo 401k right away to invest in a rental property. You can also consolidate other retirement accounts like IRAs and former employer plans to the solo 401k so that you can gain more funds so that you can invest in a rental property. So that's one of the great advantages of a solo 401k is that you can transfer former employer plans, traditional IRAs, simple IRAs, SIP IRAs to the solo 401k plan. And that doesn't impact your annual contribution limit. In other words, you can still roll over or transfer unlimited amounts from other retirement accounts to the solo 401k without impacting your annual contribution limit for the year. Well, that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here in a few hours with more crucial content to secure your retirement. Thank you. Have a good rest of the morning.